Hi, my name is Woody Meese, and today I'm going to talk about the evolution of funding, why investment crowdfunding is the future of startup financing. So in recent years, the investment landscape has witnessed a seismic shift away from traditional venture capital towards more democratized forms of financing. Now, at the forefront of this transformation is investment crowdfunding. It's a method that has not only proven its resilience, but also its capability to redefine success in startup financing. Now, contrary to the skepticism surrounding investment crowdfunding, often critiqued as supposed adverse selection, the reality on the ground speaks volumes of its success. A closer look at the data from C-Clear reveals a vibrant ecosystem thriving amidst an evolving economic backdrop. In March 2024 alone, investment crowdfunding saw robust capital gains with more than $80 million in commitments, indicating a healthy and thriving investment climate. Now, the narrative that investment crowdfunding is a less desirable path due to adverse selection fails to capture the broader picture. A significant number of issuers are choosing to start their funding journey online to avoid the arduous and often restricted nature of VC financing. Now, this choice is not born out of desperation, but a strategic decision driven by a desire for a more inclusive, flexible, and founder-friendly funding route. Or, as Suman Punaganti, CEO of Personal AI, who's currently running an offering in the public that has raised over $1.7 million from more than 700 investors, said, "It's more than building a community. It's about recruiting people to be bought onto the mission. I'm not giving away equity. I'm getting paid that people be the champions out there in the field." So for him, it's a strategy to spread the word. It's a strategy to bring awareness. So now let me focus on the paradigm shift in early stage funding. All of this is further evidence that the landscape in early stage funding, the paradigm shift, is underway. Venture capitalists have long been the gatekeepers of growth, their investments acting as the lifeblood of emerging companies. Now, they bring not only capital, but also the prestige and network necessary to catapult startups into the public eye. Traditionally, this infusion of capital has been a critical driver for aggressive marketing campaigns and rapid scaling. Yet, there's a fundamental change taking place, one that challenges the core of what it means to support and grow a fledgling business. Investment crowdfunding is often perceived as a tool for the underdog, but it's steadily emerging as the new vanguard for startup financing. This method doesn't bring money to the table. It creates a community of investors who are genuinely invested in a company's success. They're not passive participants looking for a quick return. They are active supporters, brand advocates, and often customers who believe in the company's mission and promise. The contrast between venture capital funding and investment crowdfunding can be likened to the difference between a megaphone and a chorus of voices, where the VCs might amplify a company's message through sheer financial power. Crowdfunding, it leverages the collective voice of a community to create a groundswell of organic support. Now, this is not to say that traditional advertising and scaling are obsolete, but rather that trust and community engagement can lead to a more sustainable and engaged customer base. When a company chooses investment crowdfunding, they're not merely asking for funds. They're asking for faith. The money raised comes with an implicit trust that the company is going to deliver on its promises. Each backer becomes a stakeholder in the truest sense, with a vested interest in seeing the company succeed. As the company works to fulfill its commitment, this community of backers serves as a foundational support system that can propel a company forward through word of mouth and social media share. It's the genuine testimonials that really help this company. This fundamental shift redefines early stage funding as a process that is not just transactional, but transformational. It changes the dynamics of investment from a high-stake game played with you to a collective effort where risk is shared and success is accountable. Crowdfunding, it embodies the ethos of a shared economy, where everyone has the chance to participate and benefit from the growth that they help foster. As the world becomes more interconnected and consumers increasingly value transparency and authenticity, the community-driven model of crowdfunding will likely gain even more traction. Companies that understand and leverage this will not only raise capital, but build a loyal base of supporters who are there for the long haul, through ups and downs, triumphs and challenges. In essence, the rise of investment crowdfunding is not just changing how companies are funded, it's changing the very relationship between investors and the companies that they support. It's a shift towards a more democratized, participative, and trust-based model of growth. One where the many can join together to support the visions and ambitions of the innovative few. This is the new narrative of early-stage funding. A narrative where community, trust, and shared success are the defining pillars. Now, let's move on to self-funding to venture capital. So we talk about navigating the startup funding journey. At the onset, a founder begins with self-funding. It's marked by deep-seated belief and vision. This stage is governed by a personal drive to validate their idea, underpinned by unwavering commitment and complete full autonomy. The essence of self-funding is the founder's unfiltered control of decisions and the undiluted ownership of success or failure. Now, let's transition to investment crowdfunding. The narrative evolves from individual determination to collective empowerment. Here, the founder extends a branch of trust, inviting those who believe in their vision to join the endeavor. Crowdfunding, it's not merely about raising funds, it's about nurturing a community of supporters who are invested emotionally and financially in a venture success. This phase amplifies the startup's message, broadening its reach and solidifying its foundation through shared belief and collaboration. Venture capital, the next stage, introduces a pivotal shift. The relationship becomes transactional, encapsulating really a quid pro quo dynamic, where capital exchange opens doors to scalability, but at the cost of relinquishing a degree of control. The venture capital stage underscores a strategic partnership where expectations of return on investment guide decision-making processes. As founders navigate this landscape, they juggle the dual challenges of scaling their vision while managing the increased influence of external stakeholders. This journey through funding landscapes underscores the transformative experiences of startup founders. From the autonomy of self-funding, through the community-driven spirit of crowdfunding, to the strategic partnerships shaped by venture capital. Each stage brings its unique set of challenges and rewards, reshaping the founder's role and the startup's trajectory towards realizing its full potential. Now, venture is moving upstream, and investment crowdfunding is filling the void. The notion that VCs are the end-all be-all for startup success is increasingly becoming outdated. In recent years, VCs have seen a noticeable trend of investing upstream and showing a preference for supporting their existing portfolio companies. This is leaving a gap in the market for early-stage financing. This gap is where investment crowdfunding has not only entered, but flourished, successfully filling the void left by traditional VC financing. The C-Clear data showcases a really diverse range of successful campaigns across various sectors and at various stages of growth, underscoring this method's versatility and appeal. One of the most telling signs of investment crowdfunding success and performance is the diversity and volume of deals it facilitates. Now, March 2024 data highlights a variety of industries embracing crowdfunding, from technology to biotech. It reflects a wide range of trust in investment crowdfunding's capability to connect really visionary entrepreneurs with forward-thinking investors. Notably, these campaigns are not limited to the traditional tech hubs, but are really spread across a spectrum of geographic locations. This showcases a leveling playing field that has been really long overdue. Investment crowdfunding also addresses a critical pain point for startups: the need for early-stage capital without stringent terms and control that VC funding often imposes. By allowing investors to retain more control and equity, crowdfunding has emerged as a preferred option for those looking at broad returns and timelines. It provides an alternative route to capital that really aligns with a startup's values and goals. It offers a symbiotic relationship between investors and entrepreneurs that goes beyond mere financial transactions. In addition, the advent of online investment platforms has really transformed the accessibility of investment opportunities. Platforms like Public, WeFunder, StartEngine, Honeycomb, Mainvest, and SMDX have democratized access to investment, enabling people from all walks of life to participate in the potential growth of startups. This democratization not only diversifies the investor base, but it also builds a community of brand ambassadors who are financially and emotionally invested in the company's success. Now, let's talk about the crowd as family. This community aspect of investment crowdfunding cannot be overstated. When individuals invest in a crowdfunding campaign, they're not just providing capital, they're also offering their networks, skills, and support. They become part of the startup's journey, advocating for brand and contributing to its market traction. This grassroots support is often more valuable than a VC's capital injection, which may come with expectations that are not aligned with the company's vision. Furthermore, investment crowdfunding has shown a remarkable ability to adapt and thrive in various economic conditions. The agility and the resilience of this financing method were particularly evident during the global challenges posed by events like COVID-19, the pandemic itself, when traditional funding avenues tightened. Crowdfunding platforms quickly became a lifeline for startups, allowing them to sustain operations, innovate, and even grow amidst uncertainty. Now, as we forge ahead, it's clear that investment crowdfunding is not merely a funding alternative, but a movement that's reshaping the entrepreneurial ecosystem. Its role in startup financing is becoming increasingly central, offering a more balanced, founder-friendly approach that nurtures innovation and inclusivity. The success stories woven through the fabric of investment crowdfunding are not anomalies. They are harbingers of a new era where community, accessibility, and shared success are the cornerstones of startup growth. In light of this compelling evidence, it's time for both entrepreneurs and investors to really embrace investment crowdfunding as an integral part and as an integral component of the financial landscape. As this method continues to mature and gain momentum, the question is not whether investment crowdfunding can compete with VC funding, but really how quickly one can become part of this transformative journey. The choice is clear. Engage with investment crowdfunding and be part of a collective force driving the future of startup financing, or watch on the sidelines as this innovative model redefines success for the next generation of businesses. The evolution of funding, it is here and now, and it is unabashedly centered around investment crowdfunding. It's a future that is already unfolding. So, just to sum it up, we like to say, if you want to go fast, go alone. If you want to go far, go together. We encourage you to be part of our journey into the future of investment crowdfunding and really a part of what we're trying to achieve here at D3VC. Thanks.